Onto the Nigerian equity space, we saw the all-share index extending losses for a fourth consecutive session on Tuesday, closing at 42,664 points. Meanwhile, according to Afrinvest, investors might have already priced in the expected half-year earnings. We'll review what this could mean for the board going forward with Ayodeji Ebo. He's the head of research at Afrinvest Securities. Thank you so much, Ayodeji. It's a pleasure to have you. Now, we're looking at 4 consecutive days of losses. Now, you say that the market has largely priced in the earnings, but could it also be the handiwork of speculators?
When you look at what has happened in the past few weeks, based on what we have observed, the short-term horizon of most of the investors in the market, they tend to hold securities for a very short period as a result of the low confidence they still have about the Nigerian equity market. So the rally experience that factored in some of the expected prices, corporate action. When you look at GTB trading close to 30 naira, you expect that the normal interim minimum of 25 kobo they have been paying for the past 8 years, minimum investors would have also priced that in. So some of them are just they just take the profit looking at based on the current price has been factored into the the expectation of the result and factored into the price.
So you're saying that basically investors already know what the numbers are going to look like across the board, from the banks to the consumer goods? And
they have an idea of the direction of how the results earnings will look like.
Now, you also say, I mean, looking at some parts of your research, that you say the banks for the second half of the year is still going to be a challenging one for Nigerian banks. So what are those key pressure points you see?
Yes, firstly, like when we looked at that is why we've centered our upcoming banking sector report, which is navigating through the challenging environment. We expect that most of the banks will have to skew lending towards the retail space, which they will need to also take caution because there may be likely increase in the non-performing loans. When you look at, they would like to take advantage of the spread between the maximum lending and the prime lending rate. But with the new development of the CBN to further foster the credit bureau system and the biometrics system, it will help try to tame the non-performing loan. And we've also seen yesterday, First Bank concluded its Eurobond of $450 million at 8.2%, which currently as at March, the capital adequacy ratio was around 16.3%. So we expect most of these banks, in view of the likely increase in interest rates in the developed economy, there will still continue to be Eurobond rush in that particular space, so that they can, and in view of the increasing opportunities in the oil and gas and the power sector, they will also be able to raise capital so that they're able to match.
But that's a good thing. I mean, if they're raising fresh capital, they're boosting, growing their loan books, that obviously that's a good positive for the banks.
So when you look at, on the other hand, when you look at the increase in the AMCON levy, the 0. As at last year, they added the 0.5% on the off-balance sheet item. It will also impact, and the more they try to grow their assets, the 0.5% on total assets will also weigh on the income. So you have to also price that particular cost into the yielding assets, such that, and when you look at the declining yield, fixed income yield, which opened around 12% in January, is currently around 10% now. Yeah. So when you look at that, the margin continues to thin, and we project that the growth rate will also still remain within the single-digit rate. We won't see a very skyrocketed double-digit rate like we saw in
so not very fantastic earnings coming from the banks.
But will still be positive, but not very fantastic within single digits.
Let's talk about insurance stocks. We've seen insurance sector, we've seen 2 or 3 earnings. They've been mixed. So, I mean, how is this going to shape sentiment for this sector, for investors, in terms of how they begin to cherry pick? We know 2 or 3 of them that stand out, perhaps the likes of ICO and Mansard Insurance.
Yeah, we see, like you mentioned, Mansard, ICO, they try to leverage the IT, the technology to try to see how they can penetrate the active population, which is over 40 million. So if they are able to leverage this, they will be able to increase they were able to increase their penetration, increase their earnings within this particular period. However, the low-hanging fruit still remains the compulsory insurance scheme. As long as if that bill is passed, it will also increase participation in that particular space.
Help all of them across
with
the board.
The recent development that we
all
see that some of those companies are trying to churn out their results.
Okay, Ayo, we're going to have to leave it there. I'm sorry, we're going to have to leave it there. Thank you so much for talking to us, bringing us up to speed on the performance of the Nigerian equities bourse. That was Ayodeji Ebo, head of research at Afrinvest Securities, giving us an outlook for the Nigerian equities market.